What is up, everybody? Guy Costin, founder and CEO of Dakota. We are hosting a can't miss conference on June 17th in the afternoon at the New York Athletic Club. This is something that you don't want to miss. And I know there's a lot of hyperbole, but we're hosting an investor day with managers across all asset classes. And we're going to ask them one question for a 10-minute interview on stage. So 10 minutes each, going through what are you so excited about in the next 1 to 3 years from an investment perspective. And we're going to get some unbelievable feedback across all these different asset classes. And if you look at the list, this is a world-class list of managers. Simply register on Dakota.com. And as an allocator, it's free. Register today at Dakota.com. Don't miss out on this.
Welcome to the Dakota Research Podcast. This podcast is for informational purposes only and should not be considered investment, legal, or financial advice. The views expressed are those of the speakers and do not necessarily reflect the opinions of Dakota or its affiliates. We do not provide investment recommendations or solicit investments in any securities or funds. Listeners should conduct their own research before making any investment decisions.
Welcome back, everybody, to episode 16 of the Dakota Research Podcast. Today is June 6th. We are excited to bring you an action-packed episode talking about the space economy. Through this episode, we're going to be talking about what are the investment themes that are going on within the space economy, how are investors allocating capital, actionable investment opportunities, where capital is flowing, and then kind of key questions that people are asking about the market. We've got a lot to cover today. As always, I'm joined by my co-host here, Alex DeMarco. We're very excited to bring this episode to you, and we're going to bring you a lot of data from Dakota that we're very excited to share with you. So to dive right in, we're going to be talking about why space and why now to set the groundwork. So it's actually not really too far-fetched concept now. There's a lot of activity, a lot of M&A. There's a lot of new venture-backed companies that are becoming as large as some of the public companies that are in the aerospace and defense sector itself. We talked about aerospace and defense a few weeks ago. Really interesting trends that are going on in that part of the market. But within space, the space economy is really no longer science fiction. Yeah. It's a global trend. It's not just happening here within the US, it's happening within Europe, it's happening within Asia, it's happening within Latin America. Just to cite a really interesting stat. So this is from McKinsey, $2 trillion market. That's expected to be the size, the total addressable market by 2035, the space economy. That number is absolutely staggering. You know, for a lot of people that are kind of on the sidelines and just thinking about, wow, I'm seeing, SpaceX, or I'm seeing a different investment made. They think of it's like, okay, this is interesting, this is new. But when you start to unpack it, and as we're going to go through this episode, we're talking about a lot of actionable, very large deals that are taking place underneath the surface.
Yeah, I didn't really believe that number at first when I read it, but then once we kind of were preparing this episode and looked through all the deals that have taken place, even just in May, the month of May, you can kind of realize that there's a ton of capital flowing into these companies.
And I think what's really important is to give context, and that's what we're going to do. We're going to talk about the segments and the different industries within the space economy. But just I think also an important point, not a stat, but just think about GPS. Where were we before GPS and satellite systems that allowed for GPS to occur? I think it's an important analog because GPS actually alone has generated trillions of dollars of economic value. This is also cited by Space Capital, which is a space specialist investment firm. GPS serves as a framework for understanding how large ecosystems form around space-based technologies, which in turn leads to innovation and expansion. Just to break things down very quickly, we're talking about things like media, entertainment, and sports, which is currently the largest part of the market. I think satellite TV, global streaming, live event broadcasting, even space tourism. These are all kind of redefining entertainment and media distribution on a planetary scale. Also think about state-sponsored defense. So these are governments investing heavily in space-based defense infrastructure, which includes satellites, cybersecurity, and satellite-powered communication systems. But there are other areas that are key segments that are interesting to talk about now, particularly including supply chain and transportation. Think satellite networks and space-based tracking, which are used to improve logistics, also enable more efficient global supply chains. They also help support autonomous shipping and aviation. In the food and beverage market, space-driven R&D is advancing food sustainability, packaging innovation, longer shelf life products, a lot there. You also have a part of the retail consumer goods and electronics segment of the market. So this would be space technology that's enabling new consumer products, from satellite connected devices to materials developed through microgravity manufacturing. So just these are a couple key segments that people are talking about, some of the thematic areas that are really driving it. So why now, I guess, is one question that people might be asking. And that there's several reasons for what the catalysts are behind this rapid adoption, innovation, and also spending in the space economy. First is privatization of space. The shift from government-only programs, think NASA, think some of the other international programs like NASA, that are geared to commercialize and accelerate innovation, but also helping with competition and development of new services and platforms. We have a tremendous amount of new defense spending, largely in part due to geopolitical reasons. Rising global tensions are prompting countries to enhance their space-based defense capabilities, including missile detection, satellite surveillance, and secure communications. You also have a number of these private and public partnerships that are cropping up. So collaborations between government agencies and private companies, which are really fueling a build out of critical infrastructure and also helping accelerate the commercialization of space assets. And a final point just on these key catalysts is independence. New systems are emerging to reduce the reliance on U.S. technology. So obviously we have a very more mature, developed space program in this country, but this is not just isolated to the U.S. Europe has a group called REARM. It was a European plan. They have about 800 billion euros that are going to help reduce the dependence on U.S. and Starlink, for an example. 80% of European hardware is actually imported from the U.S. One alternative to Starlink is an example is called Eutelsat. So we'll talk about that a little bit later. Why should investors care? I think there's a lot that's going on right now that are similar, can even be a parallel to what the early internet or semiconductor boom led to. The space economy is currently at an inflection point, which is really enabling foundational technologies to go from costly and rare to scalable and ubiquitous, which is unlocking commercial value. These would be in the areas of such as launch services, satellite constellations, in-space infrastructure, defense and security, smaller satellites, to name a few. And we're going to be talking about how we define the space economy and how people can think about that in a second. But just to go unpack these areas a little bit deeper. So to start off, launch services. We hear a lot about SpaceX. This would be one example, their Falcon 9. There's a lot of innovation going on in rocket reusability, which is really cutting launch costs and allowing, it's actually over 10 times cheaper now than it was just a decade ago. So you think about the innovation there, and you think about Moore's Law in the semiconductor space and what that means for new innovation, new products and services that can actually get to space can be created as a result of that. Lower cost means access is no longer limited to governments or multinational giants. University startups, emerging market governments are launching payloads now into space and have become real players. We're seeing this in India too, and we'll talk about that in a little bit later. This democratization of access is similar to how cheaper computing unlocked the PC and cloud eras. And within satellite constellations, you also have companies like SpaceX that has the Starlink system that we've heard a little bit about, but actually Amazon has a project of its own, and then there's OneWeb. All three companies are building mega constellations with thousands of low Earth orbit or LEO satellites. These networks create a global internet backbone, bring high-speed connectivity to underserved rural and emerging markets. We saw this with the Ukraine war, Starlink stepping up to help provide at least communication capabilities to Ukraine during that time period. The economic impact of satellite constellations is actually pretty big. It's comparable to the expansion of broadband in the 1990s and 2000s, which enabled things like e-commerce and digital media and remote work, just to name a few. From the perspective of in-space infrastructure, think 3D printing, pharmaceutical development, semiconductor fabrications. These are all different applications from in-space infrastructure that can leverage microgravity for processes not possible in Earth with gravity. You also have orbital assembly of large-scale assets like solar arrays, telescopes. They're becoming more economically viable. Space stations and depots to help connect and create R&D hubs. This really mirrors how data centers and hardware infrastructure have scaled in the internet economy. And then just a couple points also on defense and security. We talked a little bit about geopolitical reasons behind this, but you also see the US, China, Russia, and others now expanding their presence in space. Satellites are becoming increasingly important and critical assets in the modern warfare. Just like we talked about GPS, which actually was originally military technology, became a commercial game changer. Other defense-derived space technologies could also spill into private market applications. And then finally, smaller satellites. They're becoming cheaper to produce, faster to deploy, and ideal for targeted missions like Earth observation, communications, or climate monitoring, to name a few. Also becoming more modular. So scalable nature of these satellites is akin to the shift from mainframes to personal computers. It's enabled by cheaper launches and advanced miniaturization. So again, a lot of it's about building the platforms, these launch capabilities, the cost coming down, and then also helping foster ways to enable these types of areas. But Alex, I know you're going to walk us through the space economy and just talk about defining the space economy.
Yeah, absolutely. I think when you think about the space economy, it can really be broken down into 6 main areas. So one to touch on is satellites. We talked about satellites a little bit just now, but broadly speaking, satellites are the foundational layer of modern space infrastructure. They provide communication, imaging, and monitoring, GPS, scientific data. Think of them as sort of like the eyes and the ears of our planet. So a couple examples there would be Starlink's, continued global expansion in Planet Labs, Earth imaging services that are really scaling for agricultural and climate data, which we'll talk a little bit later. Super interesting area. Launch providers are sort of the UPS and FedEx of space. They're ones that are shipping, building, and operating these rockets, delivering things to space, satellites, scientific instruments, cargo. In order for the entire space economy to actually work, like these launch companies are crucial. So SpaceX in 2024, they recorded 90 launches. I'm sure that number is going to increase immensely over time. And another area that we want to touch on is stations. So space stations are orbital platforms where people and machines can live, conduct experiments, and eventually we'll talk about a little bit, but actually manufacture goods up there.
Like the International Space Station.
Yes, exactly. Historically dominated by, government-led things like the International Space Station, but there are now these private commercial stations and looking to open these in space for, biotech, research, tourism, really cool areas like that. Logistics. So once all of these things are in orbit, they don't just sit still. So space logistics is really important and involves moving satellites, refueling, servicing, managing traffic to avoid collisions. That, is not like an uncommon thing to happen in space. As there are more things floating in space and it gets more crowded, this type of service becomes really crucial to make sure nothing happens that shouldn't. Lunar. So the moon is becoming a strategic target, not just for, exploring and, planting our flag, but also for science, mining, staging deeper missions. Governments and private companies as well are actually racing to develop landers, habitats, and robotic systems for long-term lunar activity. And then one more sort of section of space that we want to sort of highlight is sort of industrials. So space offers a unique production environment. So zero gravity, vacuum, extreme temperatures, which can enable better materials and medicines. In space manufacturing, it's still early on, but it holds potential for really high value in industries like biotech, semiconductors, and fiber optics. So a couple examples there: Varda's first in-space drug manufacturing return capsule, and Redwire's 3D printing on the International Space Station.
And I think having just that lens through understanding these 6 segments is really key, because it broadens your understanding of really what are kind of the other areas of interest. And when you start kind of going line by line and talking about each of those other, each of the 6 key segments, and then the other 5 beyond just like launch technology, you start to quickly realize, wow, there's a lot there and a lot within these specific areas.
There's a lot there, and it's important to really understand the value chain, because a lot of these companies and offerings and services and products are very interwoven. So it's important to know, like, okay, where does satellite companies fit in the broader picture? Where do the materials and the industrial side of things fit into the bigger picture? So I think hopefully that gave good overview of just what is the space economy. So,
and where we are in this point in time, because it feels like the last 5 to 10 years really has been about like launch technology, and then you're seeing this tremendous acceleration in these other areas that are taking place today.
Exactly. We're going to continue and kind of talk about some trends we're seeing in the M&A space. We're seeing a ton of consolidation and investment across infrastructure, distribution, and applications, especially in launch systems. So an example there is Firefly acquiring a launch vehicle tech from Northrop Grumman. We're seeing in satellites, example there, Terran Orbital has been spinning off assets. Lockheed Martin has investing a ton in smallsat constellations.
There's a lot of consolidation going on with the satellites.
Yeah, absolutely. GPS, we're seeing some consolidation there. Trimble's expansion in the precision agriculture and construction is something to call out on that side. Geospatial intelligence, an example, Black Sky has made some acquisitions to enhance their AI-powered satellite analytics. And then satellite communications, some partnerships there. Amazon's Project Kuiper partnering with Verizon for broadband coverage. And then just definitely want to highlight who the major players are in the space economy, both public and private companies. So I think a couple names that everyone knows: SpaceX. They're sort of in that launch bucket that we spoke to previously. They're valued right now roughly $350 billion, which is a nuts valuation for a private company, which I think soon will probably be public in the next 12 to 24 months. We'll see. So they're just the leading private space launch and satellite company led by Elon Musk, obviously. Blue Origin, that is a Jeff Bezos founded space company. They are also focused on launch and lunar missions. They're valued roughly at $100 billion. And then another launch company is Rocket Lab. They're actually a public company, $12 billion in market cap. They're sort of a small satellite launch company. Sierra Space, sort of in the lunar segment, valued at around $5 billion. They're a developer of space planes and habitats. They're actually awarded a NASA lunar logistics contract, which is a pretty big deal. Firefly Aerospace, they are a launch company worth around $2 billion, private company. They offer launch services. They got a investment from Northrop Grumman in 2024. They raised a Series D then, so they're showing some strides in growth there. Axiom Space, focused on the station segment. They're building private space stations and space tourism capabilities. They're valued around $2 billion. Planet Labs, they're focused on satellites. They build Earth imaging satellites. They're a publicly traded company. As we wrote this, it was around $1.2 billion in market cap. And then a couple more. They're an early stage satellite launch startup backed by A16Z. They raised a Series A in April of this year. Slingshot Aerospace is a logistics company. They work on space traffic and situational awareness. They raised $30 million in September of last year. And then a few more here. Relativity Space, they raised $100 million early on this year. They do 3D printed rockets. That was a Series E funding. And then Saronic, they're on the industrial side. They've raised $600 million. They do defense AI and autonomy. So
as you go through that list, you quickly realize too, the kind of what we talked about earlier, is some of the companies that are further along are in that launch segment, and command some of the highest valuations.
But those other areas are raising some significant capital,
and they're cropping
too.
up quickly. Like if you just look at, for instance, like Sierra Space, which is focused on the lunar segment, and valued at $5 billion, and they're developing space planes and habitats. So that's a little bit further out the curve. You also go down the list and you look at Axiom Space, focused on stations, and they're building private space stations, and they're valued at $2 billion. Quickly go down this list and you realize, wow, these other segments are really starting to crop up and becoming more important and relevant in the space economy.
Yeah, absolutely. Chris, we talked a little bit about some of the big players. Let's talk about some specific deals too that have happened recently.
Absolutely. It's actually, this is kind of blew my mind actually. So going through Dakota transaction data and just looking at where capital is flowing today and what businesses and like what's going on. These are just a couple of deals that have been announced really within the past 1 to 2 months, or transactions that have been
all tracked by our team.
All tracked by our team. So Voyager Technologies, This is a defense and space contractor. They are planning a public offering, targeting an IPO of around $1.6 billion. They're seeking to raise about just under $320 million in their IPO. Some of their lead investors include Janus Henderson and Wellington Management. So more to come there, but something that definitely is being followed by the market. There was the acquisition of Geost by Rocket Labs. Rocket Lab, as we mentioned, is a space company expanding its satellite payloads. With this acquisition, they acquired that company for $275 million. There was a Series C led by Excel of True Anomaly. They're a space security company developing autonomous defense products. Expo Systems, this was invested by Lockheed Martin. This was Series B that recently took place. They raised over $105 million in that Series B. Expo Systems produces advanced manufactured solid rocket motors and defense technologies. Another interesting deal to call out, Zeno Power. They recently raised a Series B, raising $50 million, with one of the lead investors being Hanaco Ventures. This company develops nuclear batteries for remote and extreme environments. And then another company, just to call out very quickly, Reflect Orbital. They raised a Series A led by Lux Capital. They raised $20 million. The company is building a satellite constellation to deliver on-demand sunlight. Kind of interesting when you think about the energy aspect and how do you actually kind of refuel and keep the systems going in space. Like, as you mentioned earlier, the servicing component, this infrastructure layer, is extremely important. So Lux Capital investing behind that theme there. There are a whole host of other transactions that we found over the past month plus, and it's really incredible. And you can see kind of the companies are coming further along in the Series C or B and later. It's kind of the late stage rounds of these companies raising capital. So why don't you take us through and just talk to a couple other themes that are gaining institutional appeal?
Sure. Yeah, I think a couple themes to hit on. First is sort of this dual use technology aspect with the crossover of defense and commercial applications. So we're seeing a growing wave of innovation where technologies originally developed for defense are actually being repurposed for commercial use and vice versa as well. So a couple examples from AI-powered ISR systems to satellite imaging. The lines are kind of blurring a little bit here. So this dual use dynamic creates a unique opportunity. So it aligns national security priorities with scalable commercial markets, unlocking funding pathways like DoD contracts alongside venture capital. So institutional investors are attracted to this because it provides a diversified demand source. So not just, a binary outcome of like, okay, this happens, or, it's a complete flop. Having the ability to attract demand from more than just one area is a good way to sort of buffer the risk.
We talked about like the dual use applications in aerospace and defense a couple of weeks ago.
Yeah.
And to your point, I think it's nice that investors are increasingly waking up to this idea that, it might not necessarily be binary. Once you get a couple of these larger government contracts, the optionality, the growth that comes with some of the other endeavors the company is able to pursue is really interesting. So that return profile becomes, quite attractive.
Yeah. Data infrastructure is another big one. Space being the next internet backbone, if you will. So space is rapidly becoming the new frontier for global data movement. Constellations of LEO satellites are laying the groundwork for always-on, low latency global communications network. Think of it as fiber optic cables, but in space. Institutions are paying attention to this because these assets can become monopolistic nodes in underserved or hard to reach geographies. Recurring revenue is an important aspect here as well. Earth observation. So thinking from like a ESG and agricultural perspective. So these high frequency, high resolution satellite imaging that is now feeding real-time intelligence. This is important for sectors in ESG compliance, precision agriculture. Think like monitoring your methane emissions, or making sure from like an agricultural perspective, if the crops, anything going wrong there, the satellite imaging is becoming really important for those industries.
Probably some supply chain infrastructure aspects to that too, as well.
Another one, national security and space sovereignty. So global tensions are elevating space from a commercial curiosity to a sovereign imperative. Countries are racing to develop domestic launch capabilities, secure their communications, build out autonomous satellite networks. this is really creating an investment thesis around national infrastructure plays, resilient supply chains, and defense-aligned innovation.
We talked a little bit there too about some of the defense contracts, the DoD, some of the dual use aspects of it, some of these other, there's also these retail applications too that I thought would be important to call out too. When you think about some of, like, for instance, Uber or Waymo. I mean, maybe Waymo more specifically because they are, one of the farthest ahead in terms of autonomous driving. And you think about the power, like the connectivity that's required to make these systems go. And there's a lot of retail applications too that are coming about. There's like very large markets that can be, improved, enhanced over time from these types of technologies, particularly within satellites too as well.
Yeah. There's some risks and challenges as well. It's not a perfect industry by any means.
Yeah. Rockets do sometimes fail to launch.
They do. So like the regulatory risk and geopolitical dynamics are a risk and a challenge. So, operating in space comes with the complex web of export controls, particularly around, ITAR, international traffic and arms regulations, which can limit foreign partnerships and capital. As you would guess, these capital cycles are really long. These are high CapEx projects, and a binary outcome is often the case. So unlike traditional SaaS, space and defense technologies require substantial upfront capital and years of development. So there's a lot of funding bottlenecks and increases dependency on patient capital. So either the rocket launches and it works or it doesn't. So there's definitely some risk there. Another thing I think this is super interesting is technology obsolescence and launch failures. So pace of innovation is both a tailwind and a risk. So hardware deployed today, might be outdated in 3 to 5 years. So satellite constellations, for example, are evolving rapidly. So yesterday's, bright and shiny technology could be obsolete tomorrow. On top of that, launch failures, while improving in frequency, are still carrying mission critical consequences. And then one more is, which is an also interesting point, the mismatch between VC time horizons and space investment. So, think about it. Typical institutional VC investment strategy, 7 to 10 year fund cycles, that might not match up properly with some of these investments. Space and defense startups, they take a long time to reach meaningful scale. So that mismatch can strain liquidity planning, our expectations, DPI, which has been a struggle in the venture space recently. So those were kind of some things we wanted to call out from a risk perspective.
Yeah, and we talked a lot about sort of just the broad market overview of the space economy. Now people might be asking themselves, okay, how do I get exposure here? Or how do I kind of find opportunities to invest behind these trends? It's a $2 trillion market by 2035, as we cited earlier. What are some of the ways that I can get exposure or invest behind this growth? As you expect, one way would just be kind of traditional early stage venture capital. These are the firms that are funding what comes after SpaceX, which is pioneering space manufacturing, orbital logistics, next gen satellite networks. Again, these are the investors that are backing some of these higher risk, higher reward startups across hardware, infrastructure, dual use technologies. There's actually a whole host of specialists in the space, no pun intended. There's actually a whole host of specialists in this segment of the market. They include Space Capital, who focuses on seed, early stage venture capital, 100% focused on the space economy, GPS, geospatial, satellites. They also publish a lot of interesting materials on their website, so I definitely urge people to go and check it out. They backed notable companies such as Skywatch and Leo Labs. A few more to call out. Seraphin Space, which is a UK-based space-only VC company. They invest in pre-seed to Series B investments. They've backed Spire, D-Orbit. They also run a space accelerator program, which is fairly interesting. There's Space Fund, which is focused on orbital infrastructure, launch services, space-based supply chains. They've backed a number of different companies in those areas. There's also a few other firms, Starbridge Venture Capital, Boost VC, 7% Ventures. But then, as you would expect, there's a number of generalists that are focused on sort of deep tech, frontier tech type opportunities within space. Those would include Lux Capital. We talked about them a little bit earlier on some of the recent transactions. They're focused on deep tech, defense, and innovation. They have in portfolio companies that include Planet Labs, Anduril, Astra, Varda, to name a few. Andreessen Horowitz is also a big player in space as well. They've backed Astranus, Anduril, Hadrian, to name a few. And then you have also groups like Founders Fund, Prime Movers Labs, Correlation Ventures, kind of on the earlier stage side. There's also a whole host of growth equity and traditional private equity investors that are the firms that love these dual use applications. Think hardware, software that can sell to both NASA and NATO. The specialists in that space, we talked about a few of these groups a couple weeks ago. They would include Industrial Partners, which is growth equity, also control. They also have a venture arm too. In addition to Voyager, we have other firms like Arcline Investment Management, Enlightenment Capital, and Arlington Capital Partners, who've backed Octo, which was sold to IBM, and Blue Halo. There's also strategic investors that invest through their corporate arms. These are the acquirers and commercial partners turning startups into real space operators. So think legacy aerospace, defense, and tech giants, which are acquiring and investing or partnering with space startups. These are sort of the larger firms in that area. Think L3 Harris, Safran, BAE Systems, AeroVironment, Eutelsat, which we talked about earlier, Viasat, Northrop Grumman, and then tech firms like Alphabet, for instance, where Google Cloud powers satellite analytics for Planet Labs and Black Sky and NASA. There have also been investors in SpaceX. There's also a number of public opportunities through like thematic ETFs. There's obviously a whole host of them. They're cropping up every day. There's the Procure Space ETF, which is ticker is UFO, which is kind of creative.
That's a good one, yeah.
Which is focused on pure play space companies, including satellite operators, manufacturers, enablers of space technology. ARC has their Space Exploration Innovation ETF. Ticker is ARKX, which is focused on investing in companies enabling or benefiting from space exploration, including aerospace, robotics, AI firms, to name a few. Spider has its own S&P Kensho Final Frontiers ETF, which ticker is Rocket, ROKT. And iShares also has a U.S. aerospace and defense ETF that provides exposure to large U.S. aerospace and defense firms, which have space-related operations. I think looking at these type of opportunities, it's really important to think about what GPs and LPs should be asking.
Yep.
You have, for the LPs, key questions that I think people should really think about asking when they're talking to people that are specialists or when they're thinking about looking at opportunities in this area. Obviously, one question that's always paramount to get to the bottom of is like, what's the manager's edge in sourcing? But in this part of the market too, there's a huge technical aspect to it. So given the capital intensity and high technical complexity of the space sector, GPs must demonstrate more than financial acumen. They need differentiated access to founders, engineers, and technologists. A couple questions that LPs should ask: does the GP have unique relationships with former NASA or Department of Defense personnel, or maybe even have plugins to academic labs? Because those are key people to understand, have a strong network. This talent's also fairly scarce, so it's not like everyone knows this market well. Another question would be, are they able to identify viable deep tech before it becomes obvious to others? And I think particularly if you look at like a company like Lux Capital, they were making these investments many years ago. Yeah. And I think a lot of people are probably scratching their heads like, what is that? It looks different. Like, that sounds way too far out for me. But being able to identify these deep tech and the trends early can really be ways to drive outsized returns. A few questions that people might want to consider asking are, how do they vet engineering claims and evaluate readiness levels? Do they have in-house or dedicated advisors with technical credibility? A lot of the private equity firms, particularly, they have private equity advisors or people on their board that are ex-professionals, maybe worked within the government, work within a strategic or a larger strategic. What does their network look like there? How frequently are they involved with the company? What kind of advice do they offer? What do they bring to the table? All these type of obvious questions, but having that in-house, or dedicated people as a resource is a critical advantage to sustaining an edge in the space. Another section that would be really important to talk about are there dual use applications with near-term commercial adoption. So investments in space are more compelling when they solve problems beyond the space sector itself. Can the technology be sold into defense, logistics, or telecom? Again, all three big markets. Yep. So it creates optionality, different ways to win. If there's longer sales cycle or longer capture, can I get access or make inroads to these other areas that have commercial application and might be a little bit shorter of a sales cycle? Are there near-term Earth-based revenues streams to support longer-term orbital ambitions? Dual use mitigates capital risk. If commercial timelines stretch, military government buyers can provide earlier contracts or SBIR grants as well. So a couple areas to hit on the dual use applications. Another question too for LPs might be like, how long is the runway and how do they think about exits? SpaceX is now a $350 billion company, still private. A lot of these other companies that are peers are also very late stage, going out to Series D and beyond. So what is the exit opportunity look like for the business? The space sector often requires longer timelines, but LPs should push GPs on this exit visibility. Are there acquirers actively building in-orbit capabilities? Examples include airspace primes, cloud data providers, defense integrators that might be potential acquirers. Is the public market appetite realistic within 5 to 7 years, or will it take longer? And how does the GP structure follow on reserves or syndicate planning for long duration capital needs? Again, these companies you mentioned, highly capital intensive. They require follow on. Is the GP thinking about it, or is it just a one and done investment? If so, does that give that company enough runway to be a viable company in the future when it might otherwise require more capital? Turning that on its head, for general partners, a couple questions they might want to ask, or one key question they might want to ask rather, is where can we cross-pollinate with defense, logistics, and telecom? We talked a little bit about this, but space startups that can straddle multiple end markets have stronger business models. Can a satellite imaging company serve both the USDA and the Pentagon? Could propulsion or power systems be repurposed for hypersonic or drone applications? Can satellite-based connectivity play into remote logistics, mining, and maritime industries? Also, understanding programmatic defense spending and procurement timelines is essential for identifying near-term contract opportunities. So there's a lot of nuances in all of that, but particularly on the LP side, the questions that need to be asked and really vetting that technical aspect of it is a key component to underwriting and investing in this area of the market. But just kind of wrap things up, Alex, some closing thoughts.
Yeah, for sure. I think at the end of the day, we're no longer in this era of one-off moonshots. What's happening now is the build out of the next layer of global infrastructure space. So networks, sensors, systems, these are going to underpin everything from national defense to even agriculture, the internet itself. This really has a place to play in everything that happens in the world, no pun intended. Looking ahead in the next decade, I think 3 major vectors will accelerate. Space-based manufacturing, we hinted on it briefly early on, but biotech, material science, zero gravity is becoming an R&D environment with real industrial upside. Deeper defense integration, with space now a contested domain, public-private partnerships, dual-use platforms, these will grow in strategic importance 100%. And then, again, mentioned it earlier, but climate and Earth monitoring. So collecting this data from orbit will be a critical layer for everything from ESG verification, so like monitoring emissions, maybe from a methane perspective, disaster response, wildfire risk, super important, and then insurance pricing as well, like knowing what the risks are in certain environments. They need that information.
Yeah.
So that's really going to close us out. We covered a ton there. Chris, you want to close us out?
Yeah, I was just going to say, as I think forward about the opportunities there's no doubt that there's a lot of potential.
Yep.
And there's a lot of new general partners that are cropping up in the market that are offering new opportunities. And some people are a little bit more focused and do one kind of thing. But there's also a whole host of other people that are more generalist in nature that are also tackling this theme. So it's important to kind of stay on top of these trends. And I think that one of the most interesting things for me, at least, has been just understanding like how the size of the market, the segments, the applications, the different companies, where we kind of are at this point in time, to make like a good assessment about where things could be heading. But then thinking ahead too, as you mentioned, sort of some of these other kind of more frontier areas like space servicing and some of the space-based manufacturing. These things are just like really big ideas and really interesting that'll have, applications here on the planet and in our handheld devices, computers, etc. And even areas for us to improve kind of the world and the ecosystem too.
Yeah.
But we covered a lot there. Just to round things out, we've got a couple of closing product notes and events to highlight. We are hosting Dakota Cocktails in London on June 11th. And then we are hosting our Dakota Research Conference, which we've been talking about for the past couple of weeks. We're very excited about it, on June 17th. And I think that will do it for this week. So Alex, thanks again.
Thank you, Chris.
Thanks all for joining us. Have a good rest of the day.
Hello, everyone. Thank you so much for listening to the Dakota Research Podcast. All of the information we cover today and much more lives in Dakota Research, our private fund due diligence database. If you're not familiar with Dakota Research, we really encourage you to go onto our website and book a demo so you can check out all of the recordings, all of the data, and all of the information we covered, plus much, much more. Again, thank you so much for listening in today. Go to our website and book a demo of Dakota Research today.